The U.S. tax system is so complex that when people asked the IRS to make an easy-to-follow chart, the IRS said, "How's this?" And that's just for federal taxes. In this video, we explain corporate taxes without all the jargon, so you can finally rest at tax time. So how are taxes calculated? To calculate your taxes, you need to know 4 things: your company type, the places you do business, what you sell and how much, and your financials, aka your books. Oh, and do yourself a favor, get a bookkeeper. It's the only way to catch all the deductions. Once you have all that info, you can figure out what taxes apply to you. There are 3 levels of taxes. There's federal, state, and local. Let's explore each. Federal taxes. Corporations pay 2 taxes, income tax and payroll tax. As the corporation owner, you will still have to pay personal taxes, whereas LLCs and partnerships, LLPs, do not pay a federal corporate tax. That's because with this company type, you file as an individual. You'll pay similar taxes just on your personal return. You generally have to pay those taxes quarterly as estimates. You also might pay extra excise taxes depending on what you do and sell. State taxes. States charge 6 major types of tax, and they really depend on where you are physically located, the type of goods or services being sold, sales value or volume, and so on. Let's take a look. Franchise taxes are like a membership fee for being based in that state, whether based there or operating there. State income tax is like federal income. Corporations pay income taxes to states based on sales, property, or payroll ratios in those states. Gross receipts tax is a tax on your total income in a given city, by that city. It's usually small, under 1%. Sales tax is a tax on the buyer, on goods and services. Property tax is for real estate, and payroll tax is what it sounds like. It gets complicated because every state is different, but as you grow, you probably eventually have to collect, remit, and/or pay various taxes in most states you operate out of or have significant sales in. Local taxes. Your local business taxes really only come up for larger metropolitan areas, but with 20,000 cities in the US, you should check. There are also tons of exceptions depending on your business operations. And that's it. This was the simplified version. For more explainers, visit pilot.com/grow.